the most objective industry in the world. If your numbers stink, you're out. If your numbers are good, you get more money. It's the most Darwinian. It's beautiful. It's brutal. It works. All right, guys, let's roll. Buy 5 HMTT at an 8. See what happens. It's against puts. We're fine. I want to see if you can even buy it. Colgate opens up an 8th. IBM August 95 calls. I want an offering on 1,000. I want an offering on 1,000. I want an offering on 1,000.
You want 10 more of each?
Yes. Double down. Double down. I want 10. I want 1,000.
5s are 70 1/4. It's X. We get the dividends.
Sold.
A new faith is sweeping the country, gathering strength by the day.
It's 25. It's 25. Okay. It's 25.
Over the years, as a financial reporter, I've watched money manager Jim Cramer turn into one of the market's most avid missionaries.
Colgate, Colgate, Colgate. Get me, get me, get me. There are 1,000 stocks out there that could make you rich, totally independent of what you do for a living. All right? If you had bought Merck in the 1950s, just bought 10,000 shares of Merck instead of buying U.S. savings bonds, you would not ever have to work again. 46 3/4 bid Cascade? I believe that stocks like Bristol-Myers, had they existed 100 years ago, there would have been no Marx, there would have been no communism, because what's happened is these stocks have made many millions of people rich, and they're going to do it again. Sold!
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. So our economic data today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund, and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher, and maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock the stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. It's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis, and I would encourage anyone who's in the hedge fund game to do it because it's legal,
right,
and it's a very quick way to make money and very satisfying.
Okay.
Well, by the way, no one else in the world would ever admit that, but I could care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think does that exacerbate the moves, or does it make it tougher?
You know, the hedge funds are positioned long-short, okay, not just long like mutual funds. So it's really vital these next 6 days, because of your payday. You really got to control the